Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel. Many subscribers asked me to make a stock analysis video about Tencent Holdings stock. Tencent Holdings Limited is the largest Chinese public traded company by market cap. It's even bigger than Alibaba in terms of market cap. Its business is also a near monopoly in China. Here are some of the most important questions. Is Tencent Holdings still a buy? Is Tencent Holdings stock fairly valued, undervalued, or overvalued right now? And what are the risks? To answer these questions, I'm going to cover these topics in this video. First, I'm going to talk about Tencent Holdings business model. Then I will talk about Tencent Holdings long-term growth prospects. After that, I'm going to talk about Tencent Holdings 3 major risks ahead. And then I'm going to talk about Tencent Holdings intrinsic value calculation. So we will know whether Tencent Holdings stock is currently fairly valued, undervalued, or overvalued right now. By the end of the video, I'm going to talk about am I going to buy more Tencent Holdings stock? If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week that will help you become a great investor. Let's start. In terms of Tencent Holdings business model, Tencent has many businesses ranging from social media, online gaming, online advertising, video and music streaming services, fintech, health tech, public cloud services, and investments in many startup companies like a venture capital fund. Tencent Holdings is the largest game publisher and developer by revenues in the world. For example, its TiMi Studios alone generated 10 billion revenue in 2020. This is much bigger than Activision Blizzard, Nintendo, Sony, and eBay's revenue in 2020. Tencent also has the largest social network platform in China. It's called WeChat or Weixin in China. WeChat has over 1.23 billion monthly active users as of December 31st, 2020. In comparison, China has a 1.44 billion population. Under Tencent's fintech business, it owns WeChat Pay and QQ Pay. WeChat Pay is one of the 2 largest payment platforms in China. The other one is Alipay. Under Tencent's enterprise business, which includes Tencent Cloud, WeCom, Health Tech, Tencent Meeting, and Weixin mini programs. Tencent also has many entertainment businesses, including Tencent Pictures and controlling interest in Huya as well as Tencent Music. Now, Tencent Holdings has many revenue sources. In 2020, value-added services revenues contributed 55% of total revenues. Online advertising contributed 17% of total revenues. Fintech and business services contributed 27% of total revenues. If you look at this revenue by segment growth chart here, you will see that Tencent has very consistent revenue growth from almost all its business segments. Tencent has many businesses with growing revenues, but I will focus on talking about the main businesses that drive the most revenue growth. Let's talk about the first growth catalyst, which is the mobile gaming business. If you look at this revenue by segment here, you can see that it's the biggest revenue source for Tencent Holdings. So for example, it contributed 32% of total revenue in fiscal 2020. I mentioned this earlier before. Tencent is also the largest game publisher by revenue in the world. Tencent Games publish more than 140 self-developed and licensed games. Some of the most famous games include Call of Duty Mobile, PUBG Mobile, Honor of Games, League of Legends including both PC and mobile versions, Peacekeeper Elite, Moonlight Blade Mobile, and even Pokemon Unite. Now, Tencent owns many studios including Riot Games, the maker of League of Legends, Supercell, the maker of Clash of Clans and Clash Royale, TiMi Studios, the maker of Honor of Kings, PUBG Mobile, and Call of Duty Mobile. Tencent also has substantial investments in other studios and game developers including Epic Games, maker of Fortnite and Unreal Engine, Krafton, formerly known as Bluehole, maker of PlayerUnknown Battleground, PUBG. Here are some of the economic trends in China. Mobile gaming is a huge trend in China right now, even more popular than PC gaming. Mobile gaming is very popular in live streaming and esports tournament in China. It's much cheaper to play games on smartphones than gaming on a gaming PC. Many people play games on their smartphones in China because almost everyone owns a smartphone that can run most mobile games. Also, smartphones are becoming more powerful each year. Eventually, smartphone and mobile SoCs will be powerful enough to run many console quality games. Tencent owns the biggest video game IPs and some of the biggest gaming studios in the world. Many game developers, including Activision and Nintendo, rely on Tencent to make their mobile games and to publish their games in China. Not to mention, China also has the largest smartphone user base in the world. Because of all these mobile gaming economic trends, I believe that Tencent's online and mobile gaming revenues will continue to grow for many years. I believe the second growth catalyst is Tencent's social networks and its online advertising businesses. If you look at this revenue by segment here, you can see that social networks and online advertising are two major revenue sources for Tencent. So for example, social networks contributed 23% of total revenues, while online advertising contributed 17% of total revenues in 2020. Ad revenues mainly came from WeChat. Ad revenues are also generated from TV streaming, live streaming, and music streaming services. Now you may know this already, WeChat or Weixin is the largest social networking platform in China. WeChat has over 1.23 billion monthly active users as of December 31st, 2020. In comparison, China has approximately 1.44 billion population. WeChat is essentially a near monopoly in China. You can use WeChat for many things. For example, you can talk and chat with friends, colleagues, and families. You can follow friends and other people's posts and videos. You can watch short videos called video accounts, which is similar to TikTok or Douyin short videos. You can follow other people's channels and read articles. You can send money and pay using WeChat. You can buy things online and offline using WeChat Pay. You can use WeChat to buy many wealth management products. You can use WeChat to connect with doctors and to have access to many healthcare services. Also, many businesses and advertisers use WeChat's mini programs and WeChat moments to market their products and services. Businesses advertise on WeChat because of its largest user base, 1.23 billion monthly active users. WeChat moments and WeChat mini programs are a must-have for many advertisers to market their products. So for example, Pinduoduo's community-based e-commerce business relies on WeChat to connect with customers and to sell products. WeChat makes social commerce much more popular now. This is very different from the traditional e-commerce platform that is mainly dominated by Alibaba. Personally, I believe social commerce will continue to grow for many years because advertisers will continue to invest their ad revenues in the biggest social media platforms, including WeChat or Weixin, and now TikTok or Douyin in China. I believe Tencent's online ad revenues will continue to grow for many years because of its WeChat and Weixin, QQ, its TV and music streaming services, and its most popular mobile games that also earn in-game ad revenues as well as virtual item revenues. I believe Tencent's third growth catalyst include its mobile payment, cloud, and other businesses. Now, if you look at this revenue by segment here, you can see that Fintech and business services are another major revenue sources for Tencent, which contributed 27% of total revenues in 2020. According to iResearch, mobile payment market in China is dominated by two players, Alipay, which is owned by Ant Group, and WeChat Pay, that's owned by Tencent. Both of them combined own more than 90% of the mobile payment market share in China. Personally, I believe that WeChat Pay's payment services and wealth management services revenues will continue to grow for many years because of these reasons. WeChat has the biggest monthly active users in China. Many people in China use both Alipay and WeChat Pay to buy things online and offline using their smartphones. Many businesses, especially e-commerce businesses, also rely on WeChat to market their products and services. There is a very high switching cost if you stop using WeChat and use other social media platforms in China because you will lose most of your contacts in China. Many businesses, including Pinduoduo, rely on WeChat to market their services. Now, according to the latest earnings release, Tencent Cloud is the second largest public cloud in China in terms of revenue in 2020. The first is Alibaba Cloud. According to Canalys estimates, as of March 2021, Tencent Cloud had a market share of 14.9%. In comparison, Huawei Cloud had a market share of 17.4%, and Alibaba Cloud had a market share of 40.3% in China cloud infrastructure services spent in Q4 2020. There is an enormous demand in online streaming services, gaming services, e-commerce, social networking services, remote learning and working, and moving traditional services online using cloud services in China. So looking ahead, I believe that government spending and company spending on public cloud will continue to increase quickly in China. The top public cloud providers, Alibaba Cloud, Tencent Cloud, Huawei Cloud, and Baidu AI Cloud should benefit the most from this economic trend. Tencent also has other businesses such as Tencent Meetings, WeCall, Tencent Health, and Tencent Blockchain that have a lot of growth potential. I haven't looked too much into these businesses yet. I will look into them if they become huge revenue drivers for Tencent later on. I believe the fourth growth catalyst is Tencent's continued investments in startup businesses. Tencent Holding is essentially an investment holding company. Tencent invests in many startups like a venture capital company. This is from the Q4 2020 earnings release. Fair value of our shareholdings in listed investee companies, excluding subsidiaries, was approximately $185 billion as of December 31st, 2020, compared to $131 billion as of September 30th, 2020. Tencent has hundreds of non-controlling investments, mainly in tech and startup companies. Tencent often invests in companies when they were startups before they go IPO. According to this Wall Street Journal article here, you can see that Tencent invested in Pinduoduo, Meituan, JD.com, Epic Game, Sea Limited, Activision Blizzard, Snapchat, Kuaishou, Spotify, Neo, and recently Rakuten of Japan. Tencent is always looking for great startups and high-tech companies to invest in. For example, in the recent Q4 2020 earnings call, Tencent management said this about how Tencent looks for companies to invest in. We look for very competent management teams and passionate entrepreneurs. We look for companies which have very strong presence within the local market, where they have good support by the government. They have good rapport with the customers in the market. And what we do is that we provide our resources, basically know-how, as well as some capital, and maybe in some cases some access to the Chinese market. And by large, these companies with some help from us will be able to perform in a brilliant way in penetrating their local market and sometimes in the international market. And by engaging in these kind of partnerships, we felt that it helps us to get access to exciting markets, exciting teams, exciting products around the world. Management also said this. So as you know, historically, the very vast majority, over 95% or 99% of our investments are minority investments rather than mergers or outright acquisitions. And that will remain true going forward. And for that very vast majority then, a different antitrust regime will not, we believe, impact the desirability of us investing in and supporting startups and helping them to grow into bigger, better companies over time. So we remain active investors both internationally as well as especially in China. Now let's talk about the risk. The first major risk is that the antitrust law in China is affecting all the largest tech companies in China that have near monopoly or market dominant positions. For example, Alibaba is being fined 18.2 billion RMB or $2.8 billion for its monopolistic practices, which is 4% of Alibaba's total revenue in 2019. This is from the Wall Street Journal. Major rivals of Tencent have been largely shut out from WeChat's ecosystem. The 1 billion plus users of WeChat and its domestic sister app Weixin cannot easily share links to Alibaba's e-commerce platforms and to short videos on ByteDance, Limited Douyin, the Chinese version of TikTok. For its part, Alibaba doesn't accept payments via Tencent's WeChat Pay on its e-commerce sites. If Chinese regulators find that Tencent's WeChat or Weixin is practicing monopolistic behaviors, Tencent may get fined like Alibaba, which will affect Tencent's stock price. The second risk is that there are increasing restrictions and regulations on fintech companies in China. It all started when Ant Group IPO, the largest fintech company in China, was suspended in last November. Tencent's management said this in the recent earnings call. I think especially in the compliance point as well as the focus on risk management and the fact that we have been very self-restrained in terms of pursuing scale of our loan business. So when you look at some of the key regulations that have been put in place in the past few months, including a 30% self-funding ratio, including no loans to students, including slam down on high interest rate, including max loan size of 200,000 RMB, each and every single one of them, we have been compliant even before these regulations come around. And I hope this actually sort of shows that for our fintech business, we have been prudent all along the way, and as a result, we are actually sort of less affected by all these regulations. Going forward, like Alibaba, Tencent cannot expand its fintech business aggressively. For example, just like Alibaba, Tencent must put compliance and risk management before growth. All this means that Tencent's fintech business will be more regulated by the Chinese regulators going forward. This also means that Tencent's fintech business growth rate, especially micro and small business lending, will likely have lower growth rate going forward. The third risk is the Holding Foreign Companies Accountable Act, the HFCA Act, that affects all public traded Chinese companies traded in the US, including Tencent Holdings ADR shares that are traded over the counter. Under the HFCA Act, Chinese stocks will get delisted if they cannot be audited by the Public Company Accounting Oversight Board, PCAOB, for 3 consecutive years, and if they cannot establish that they are not owned or controlled by the Chinese government. Now, according to CBLIS research, the total market cap of the US stock market is currently 49.1 trillion as of March 31st, 2021. According to Stock Market MBA, the total list of Chinese stocks listed on the US stock exchange had a total market cap of 1.76 trillion. This is around 3.58% of the entire US stock market. Now, Tencent is not included in these numbers because Tencent Holdings ADR shares are traded over the counter in the US. In my opinion, I believe the chance of all Chinese stocks getting delisted is low because Chinese stocks currently make up approximately 3.58% of the entire US stock market, even without including Tencent Holdings ADR shares that are traded over the counter. Many large fund managers also invest in large Chinese stocks, including Alibaba and Tencent Holdings. So personally, I believe that it would not make any sense for all the Chinese stocks to get delisted because of the HFCA Act. This will cause a huge market correction in the US stock market. Now, I want to talk about Tencent Holdings' intrinsic value, so we know whether Tencent Holdings is currently overvalued, fairly valued, or undervalued right now. I want to show you my intrinsic value calculator right here. First, I define the intrinsic value as the company's future cash flow in its lifetime discounted to the present day. Now, here are some of the key assumptions I am making. The discount rate is 11.5%. This is from Finbox. The second key assumption is that we're using a compound annual growth rate of 20% to 30% each year over the next 5 years. The third key assumption is that the terminal value at year 5 will be 7,488.77 billion RMB. I calculated this terminal value using the perpetual growth model as well as the exit multiple model. Then I average out both terminal values. Now, to find Tencent Holdings intrinsic value, I'm using Tencent Holdings free cash flow growth. Then I forecast it to the future and then discount it to the present day using a compound annual growth rate of 20% to 30% each year. So let's go over some of the case scenarios right here. Under the first case scenario, we're using a cash flow compound annual growth rate of 20% each year over the next 5 years. If we project Tencent Holdings free cash flow over the next 5 years and then discount to the present day using a discount rate of 11.5%, then Tencent Holdings intrinsic value as a whole company should be around $612 billion US dollars, compared with Tencent's current market cap of $784.78 billion US dollars as of April 23rd, 2021. Then if we divide this by the weighted average shares outstanding, then Tencent Holdings intrinsic value per share should be around $63.82 per share, compared with $81.8 per share as of April 23rd, 2021. This is the worst case scenario. Under the second case scenario, if we use 25% compound annual growth rate over the next 5 years, if we project the cash flow to the next 5 years and then discount it to the present day using the 11.5% discount rate, then Tencent's intrinsic value as a whole company should be around $740.1 billion US dollars, compared with its current market cap of $784.78 billion as of April 23rd, 2021, and its intrinsic value per share should be around $77.14 US dollars per share, compared with its current market price of $81.8 per share as of April 23rd, 2021. Under the third case scenario, with a compound annual growth rate of 30%, if we project Tencent's free cash flow to the next 5 years and then discount it to the present day using a discount rate of 11.5%, then Tencent's intrinsic value as a whole company should be around $889.24 billion US dollars, compared with its current market cap of $784.78 billion as of April 23rd, 2021, and its intrinsic value per share should be around $92.69 US dollars per share, compared with its $81.8 per share as of April 23, 2021. Personally, I believe the normal case scenario of 25% compound annual growth rate is more realistic. I believe Tencent's fair interest value is $740 billion as a whole company, or 77.14 per ADR share. So am I buying Tencent Holdings stock? I am planning to buy more Tencent Holdings stock because I like Tencent Holdings near monopoly businesses. Last year, I did sell my Tencent Holdings shares by mistake because I wanted to free up some cash in my portfolio, but I did make 76.75% from it. Recently, I bought back my Tencent Holdings shares, about 1.2% of my portfolio, but I am planning to buy more Tencent shares whenever it becomes more undervalued. Based on my calculation, I believe Tencent Holdings' fair interest value is around $740 billion as a whole company, or $77 per ADS share. Now, these are only my opinions and my estimates based on my research. Make sure you always do your research and do your own due diligence first. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos and commentary videos every week that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching this video, and I will see you in my next video.